Hey guys, it's your boy Blackrue, Q Indigo Saint.
Let's get it. Indigo Saint in the building. Blackrue investing. Let's go.
Who's this producer?
Best believe I was black or invested. With your money, you ain't gotta be guessing. Profits is what we manifested. So we binge on that black or invested. Best believe I was black or invested. That course in this race, we ain't resting. We got stocks, we got crypto with a blessing. So thank God for that black or invested. Best believe I was black or invested.
My man Indigo. Hey y'all, it's your boy Blackrue. You can catch me every Monday, 7 p.m. Eastern Standard Time on the Benzinga channel, where we do the Ruell Report, where we talk mostly crypto there. And then you can catch me every Thursday, 6 p.m. Pacific Time on the Gentlemen of Crypto Network. Also, you can catch me on the Gentlemen of Crypto Network every Saturday, 9:30 a.m. Today, we're going to be talking the Steam Exchange AMA from April 27th, so the very most recent one. And let's get into it, guys. So you know what? I'm very excited to announce a little partnership with Steam Exchange and myself. It's going to be a partnership of total, like, synergistic type partnership. I'm going to be reviewing their AMAs, and they're going to be posting up stuff. Um, and one of the things that I was very sure to have, and they were very sure to have, was an uncensored, unbiased view. My opinion will not be censored in any way, and that's exactly how they wanted it, exactly how I wanted it, and that is just something of beauty to see from any type of exchange, any type of person that you're working with. That they want to be transparent. They want you to give them the exact type of news just straight. They want that type of improvement. They want that type of feedback, and that's one of the things that drew me to these guys in the beginning. Is that everything they do is 100% transparent. In fact, I was speaking to Inky, which you'll hear on here. Um, he was actually even saying that you could possibly be like almost like a ombudsman. I think is how you call them. Like if anybody from the crowd or anybody in the community had a problem, they could almost go through me. That's amazing, amazing to see from a project. And just one more announcement: they are going to be on my show on the Benzinga channel this Monday, May the 2nd, 7 p.m. Eastern Standard Time. So come on over there if you have any questions for them. Excuse me, guys. May the 2nd, 7 p.m. Eastern Standard Time on the Benzinga YouTube channel. So this AMA is action packed. So much information here. I'm going to try to keep it um, as like fluid and flowy as I can and not have it be too long. But there's so much information in here that I may just have to put timestamps for you guys in order to have it like easily digestible. Okay, so if you're unfamiliar with the Steam Exchange, they're going to be an exchange. Let me just give you like a little intro on them. They're going to be exchange that's going to be up and running quarter 2 of this year, at the very latest quarter 4 of this year. Um, they're going to have their own blockchain up and running, and we're going to give you some of the specs on this blockchain a little bit later. The Rails network blockchain, it's going to be very, very, very kind of revolutionary in two ways. They're going to do mining and they're going to also do staking. There's only like maybe one other coin I can think of that does it that way, or maybe two other coins I can think of to do it that way now. Um, but they're also going to be vetting. So they're going to vet whoever comes on their blockchain. So it's going to be sort of like a pay to play thing. Like you're going to have to pay even to just get vetted. So they're going to be very, very sure that there are no rug pulls on here. Like, I don't know if you guys are aware, but on the Binance Smart Chain, there was like a rug pull with this company claiming to be like Squid Game and saying that they had all these deals with Netflix and PlayStation and all these other people. Come to find out, it was a hoax, and they allowed people to buy into the smart contract but not sell. And they did this for like a day and a half and just ran off of people's money. With an exchange like this, they're gonna have to be vetted first, so that would probably like boot out like almost like 95% of anybody who would try to do anything like that Squid Game stuff did, because they would have people that would vet them and know that, hey, these people are not who they say they are. They don't have the partnerships that they say that they do. And I can see that being a really, really big boon for investors who might be coming from the stock world, or who might want to like kind of just know that they have stable investments. This type of chain is really going to appeal to them. There's so much information here that I could keep just going for days, but let's just kind of get into this, and let's get into this AMA, and some of the information will come up as we go along here. So I'm just gonna start it. I put on the caption so you guys could see it, and I'm gonna play it a little bit faster speed so like we can kind of really get through it, because it's like an hour long. So let's get it going. And we're not gonna go through the entire AMA parts of it. We're just gonna skip. But I'm gonna go through over parts that I think are very, very important for the community to understand.
As far as our guiding principles go, we'll just talk a little bit about each one at a high level, and we'll get into more details about some of them with the rest of the slide there. So for scalability, a lot of people ask, what do you mean by scalability? What do you mean by strategic scalability? So what we mean by that is that we've developed our blockchain, and we keep saying open-ended. And what do we mean by open-ended? So if you look at other blockchains, so to speak, to implement a change, they're essentially doing a hard fork of their blockchain, including the change and then redeploying. In our ecosystem, that's not necessary. If we implement a change, a fork's not needed, and we're able to implement it through all of our relay nodes using our master nodes. Our entire infrastructure can be upgraded without forking net new infrastructure. So we're able to continue to develop, continue to scale, and continue to introduce optimizations into our ecosystem.
So that part is very, very, very that's a big thing right there. So I don't know if you guys remember, like about 5 months ago or so, I mean, don't quote me on it, Solana, they had some downtime in their blockchain where they literally had to shut down the blockchain. From what I can remember, I think it was like bots trying to get in on an NFT mint sale or whatever, and they froze up the blockchain. And I can't remember how long they were down. I know they were down for at least 30 minutes. But with this scalability, this strategic scalability Neville's talking about, they can implement code trains here on the Rails network blockchain without actually having to shut the whole blockchain down and having to do a hard fork. They don't have to do that. They can keep the chain running just based on the way they constructed it, and not have any downtime on the blockchain. So that should ensure like 100% uptime for the blockchain. Okay, so there's some other things that are gone over here, but I'm kind of going to skip them because they're going to come up in some more information later. Let's move over here to Chris.
Start today. So as already mentioned, my name is Chris Beckford. I always like to go over this again because for those who don't know me and maybe this is your first time joining, I am the acting vice president and head of infrastructure here at Steam Exchange. So as mentioned, my career earlier,
So there's some stats and attributes here that Chris mentions that I'm going to just go over very quickly. Okay, we got this approximately 350k transactions per block. I actually divided this out, guys, and watch how exciting this is. So it breaks down to basically like 116.6k seconds, and this is like TPS right here, transactions per second, based off of dividing the TBC by the transactions, by the average. Can't talk today. Average block time per second. So let me just put this over here. TPS. So the slowest is actually 70,000 TPS. Putting that in comparison, Algorand, which is one of the fastest blockchains I know. It's like 12K, or I'm sorry, 1,200 to about 3,000 TPS. They say they're trying to work it so it's actually 45K, um, 45K TPS, which is still slower than the 70K TPS that Rails network is going to have. If we look at Solana, it's pretty heavy right now on the blockchain for Solana, but it's usually around like 2,200 transactions per second. So they're kicking Solana and Algorand's butt as far as speeds going. So that's absolutely amazing to know. All right. So moving on, let's look at that again here. Um, so that's really amazing to know. The transaction latency is about 40 seconds. They could probably be much faster than that, but they probably want it to be 40 seconds so they can just verify that the transaction goes through. It's about the time that Algorand uses, I think. Um, so I think they just do this just to ensure that everything is happening and has happened okay in a valid way. They're just being extra safe here, and I really appreciate that. And then testnet block height, which I'm not sure about exactly what that goes to. But that's 221K. All right, so that's one thing to note there. And then we kind of get into the really big part of this AMA. They're going to migrate their coins, which are now sitting on Binance. They're going to migrate them over to their own exchange. And the starting supply is going to be about 165K, so to speak. Now, Gary Bard, the co-founder, he's going to go over this, and he's very meticulous about exactly what this means for you guys, exactly what it means for us. Trading price of 6 cents. Now, this starting supply, I wanted to kind of compare this, all right, to some of the exchanges that are out there. Now, understand that this is not going to be a direct one-to-one comparison because some of these blockchains don't have their own blockchain. So, Voyager token, around 280K. So they're going to be less than Voyager token. That's something to note. And it has its own blockchain, and you can mine the coin. So that's something to know right there. Another one, and this also kind of gives us some price targets to where it could go after a year or two of being out. How long has Voyager been out? Let's see here. So Voyager's been out for about four years, pretty much. How happy would you be in 4 years if you're sitting on $1.22, like of 10,000 tokens or whatever, right? Or more. So that's Voyager. Let's see if we can find another one that's close to that. Bitmark token. Again, they don't have their own blockchain. 30 cents. And they're close to Bitmark. They're a little bit less than Bitmark's total supply. How long has Bitmark been around? About, you could say about like 3 years. So that's pretty amazing to see that, right? Let's try to look at another one. I think this one actually has its own blockchain. 6 cents, which is going to be their starting price. And they have a max supply of 10 billion tokens. So already, it's going to be way more rare than CoinEx. Let's look at one of my other little favorites, LCX. 10 cents, and they have a total supply of almost a billion. Circulating supply right now is 757K, right? So imagine it being at 10 cents. Nice little boost. And then how long has LCX has been around? They've been around about 2 years, okay? So imagine they get listed on Coinbase, because now they're moving to a coin, and that's one of the things he makes very clear. They're moving from a token to a coin, which gives them the ability to be listed on other exchanges like LCX is here. So he really makes a distinction here between being listed as a token on an automatic market maker and being listed as a coin where you can kind of meet the issues of supply and demand. So bear with me here. I think we should almost listen to the entire thing of what Gary's saying, because there's just so much information on it. I'll probably try to do it at 1.5 speed instead of just 1.25.
So this is something we've been talking about. I'm gonna go maybe a little bit more into detail about this. What you guys are seeing on the screen is point form, but I will, as Chris and Neville mentioned, elaborate more on it. We could potentially circle back to it in the question period, and we could elaborate more. So if you guys could hold off on the questions you guys are throwing in the chat.
And by the way, he says these numbers will change. He's just saying that to maybe they don't, but he's saying these numbers will change. So just from the co-founder's mouth, these numbers will change. So don't think that these are just dyed in the wool. And he also goes over one of the things about inflation, all right? How it's going to be 100% and how that is no worry. He's going to go into it.
Until we get to that question period, and then we promise we'll try to accommodate everyone, right? So just hear us out, and then we'll explain how it works. There's a formula. There's science to the madness. As a matter of fact, before I begin, Neville has put together a separate webpage where you guys will be able to come in and test it out for yourself, but we want to fine-tune it with the tiniest of details, so it doesn't leave anything up to the imagination. Therefore, it will be live at some point over the next 2 weeks, maybe around that time, right? So, supply, we went over that. I'm just going to go ahead and explain it with pairing it with the trading price, okay? So trading price and everything that you're seeing on the slide is strictly for the moment of migration, okay? So at the moment of migration, we need to calculate all these values so that we can input all of these numbers into the blockchain, into the configuration of the blockchain, right? Inflation, term one. Why do?
Okay, and this is the moment of migration. It's going to be migrating over from Binance Smart Chain to their own Rails network. If we come over here and look at their price right now, I think I did the calculation where with their price right now on the Binance network, it means like essentially 606 tokens represent one token in this network. So this is what we have as a price right now. This is what we have as a supply right now. I did mine based on a 100 billion supply, but I might be a little bit off with that. Maybe I should have just done it by total supply out there right now. I don't know. I'm thinking doing it by max supply was the right thing to do. So just keep in mind, if you got like 606, 605 tokens, pretty much what you're going to get is one token for that. But don't worry, because if you had like $99 of worth of tokens here, you're going to have $99 when they migrate. So that's one thing he's going to point out. But just listen here. He's also about to do the inflation term, as you can see by the captions.
We go with term one instead of setting a particular time, because as everything that we do, we want to protect everybody and the ecosystem, and we care about you guys, the investors, right? The OGs, so to speak, because there's going to be new people that are going to come, but you guys are the backbone, if you will, right? So term one, we're going to go with an example here, and again, this is preliminary. Term one, essentially right now, the way it's calculated is 1 year. So within 1 year, the production of coins that are going to be minted does equal to 100% of the supply that we currently have. Well, that we will be starting with. It's all very carefully and meticulously calculated. And I will circle back to that. Now, one thing that's fair to point out, the way we're looking at this, guys, it's very important to understand what we're saying here. We're not saying that we're better than anything out there that's in existence. We're saying we're different. So we're not saying that somebody else has a blockchain with negatives, and this is their negatives. We're completely not saying it, okay? Take into account the two major ways of running a blockchain, proof of work and proof of stake. It's not necessarily that there's something bad about them. It's that this is common practice. And what we're doing, our vision, is built with that common practice in mind, with both of these two ends of the spectrum.
Okay. Okay, so what he's saying there, let me just go into that a little bit. So first of all, this is going to be a hybrid system where it's both proof of stake and proof of work. I'm not sure if so I've done this video over a couple times. I'm not sure if I said that already, but this is going to be a hybrid system where it's proof of work and proof of stake. So this provides them with two different things. The proof of work is always more secure because you got multiple different miners kind of working on the blockchain, and they kind of have you have to kind of pay to get a transaction approved. They're kind of like a last line of defense in the security of getting and getting, oh my gosh, my cats are crazy, getting getting something approved. So you gotta go through the kind of the miners to get that done. So that adds more security. But then with the proof of stake, what you do is you provide a little less environmental hazards, like that whole thing about certain coins being an environmental hazard by mining them. That's a little overblown. It's a lot of overblown in my opinion, especially given that the coin that everyone talks about mining is almost 91% mined anyway, pretty much. So there's not much more mining of it that's going to pretty much happen. So a lot of that is way, way, way overblown, but still they're accounting for it here. So that's what they mean by the two opposite ends of the spectrum.
Meshed together on some aspects. So we know there's people that want to mine. Their computer skills allow them to build a miner, they excel at it, and they enjoy it. And they do not enjoy running a node. They want to mine. So by having the proof of work aspect, we're satisfying that part of the community, right? We are also aware that there's a lot of people that kept asking us about staking, right? So proof of stake commonly is where you have nodes and you stake coins, right? In our case, we're opening this up to anyone that ever wanted to participate in it, whether you know how to or you don't know how to. Doesn't matter. We'll help you cross that bridge. We'll have demos. We'll have explanations. There will be tutorials. Everything will be there. All you need to have is the will. As long as you have the will, we will help you do it. Now, what's the...
I understand what he's saying is not hyperbole. He's really saying that if you have the will to do it, he's going to help you do it. Because they're going to talk a little bit later about GameFi Learning. They've teamed with a couple universities in Canada, because this exchange is in Canada. They've teamed with a couple universities to do GameFi Learning, guys. How huge is that? Now, first of all, that's huge for me in one way. Like, you guys know I do a show on Benzinga, so I also like kind of look at stocks a lot too. And the stocks to me that are like really cool are the ones that have like a diversity, right? So not only are they doing the kind of the mining and the Bitcoin, or I'm sorry, the crypto. Not only are you being able to mine their coin, and they got their whole crypto deal going, their whole blockchain going, but also they're going to be in the education sector. That is really cool. Now offer some insulation in case the crypto sector is not having a good month or whatever. You know that this company is not just crypto, they're also education as well.
Beautiful part about here, and this is very, very much like mixed all together. So we can't really go into one topic without touching the other one. It's all in conjunction. So what's the beautiful part about here? So the beautiful part about here that our vision is to reward the miners and the nodes. The whole category for miners, take that into consideration, right? And then take into consideration the nodes and the master nodes. That's one category. Let's just call it nodes. With the example of 50-50. So if per each block that gets generated, we reward the entire section of the miners 50 coins and the entire section of the nodes 50 coins. Now do bear in mind that it does break down further, right? It's not one entity ever that gets it. It's split into hundreds if not thousands of entities, right? So if you have a pool with 1,000 miners on it, it's split between those 1,000 people, right? And not necessarily split equally between those 1,000 people, but we'll get into that later. And if you have a node running, it depends if you're running a master node or if you're running a relay node, right? Now with that being said, bear in mind we are currently looking in the direction of one thing we're going to do for you guys, and this is not 100% set in stone, but it's something we're very much so leaning towards, is at the very least, if you don't qualify, and later on we'll have a different AMA about this, if you don't qualify for running a master node, because it does require a little bit more technical skill than running a node, right? At the very least, we're looking at potentially guaranteeing that every single person that has been there, so every one of you guys is the OGs, guaranteeing you guys a spot in running a relay node. Now, the main difference here is it is commonly done in such a way that if you missed it within the first week, you probably are looking at going and borrowing money in order to buy what have you, company's token, right? And staking it on a node. And if you run it wrong, you actually end up losing a substantial amount of money. We've talked about this before. I'm just going to go over it again in case somebody missed it or someone new is here. When you run one of our master nodes or relay nodes, we're not asking you to stake anything. As a matter of fact, we don't want you to stake anything, and we made it not possible for you to stake anything. So all we're asking you is to run a master.
So that's amazing too. So they're not asking you to stake anything to run a node. Some companies, like the cheapest I've seen it, is like 2,000 of one coin to run a master node. But usually it's way more expensive than that, and it's just like Gary said. If you missed it the first week, like, it's dumb expensive, just straight dumb expensive for you to get a node if you're trying to get a node on an exchange and kind of be a node. The reason why this is a really good thing to kind of point out, and the reason why they kind of ask you to kind of stake, why they usually ask you to stake some money to run a node, is that if you're running a node, you get paid in that coin to kind of run that node. So when he says that he's offering the OG people that are here the ability to run a relay node, that's something that's huge, huge. Because if you can actually run that relay node and keep it up and running, you're just going to get paid passive income just to keep that node up and running. So that's huge if he offers that to the OGs people. That'd be very, very, very cool. And me, as someone with like Linux and programming experience, that would be something I would like really kind of jump at. So, there's that. But yeah, that's huge, guys. Let's keep it rolling.
Node or a node if you want to, and we'll help you facilitate that. Why is this important for us? Well, it helps us stabilize the ecosystem. It helps us stabilize the blockchain. The more people we have it running, the better it is. In security, in performance, and in many other things like such, right? Now, we've also always said, we're for the community. We look at the greater picture. We look at what's going to benefit everyone more. And we strongly do believe that our vision here, where we don't take anyone's money or you don't have to stake your coins in order to run a master node or a relay node, will allow that much more people to come and participate and run a node, thereby, like I keep saying, upkeeping the ecosystem, right? Now, should you want to run a miner, no problem. You're going to join a pool if you'd like. Go for it. We'll help you guys facilitate that as well. And for the pool operators, obviously, we'll help them get going as well. Now, a key point here is by separating the reward into two different reward systems, we now have the capacity to look at scenarios and implement preventative measures. So it's commonly done out there, as other blockchains do it commonly. They have preset time or epiphany, like was just talked about prior to this slide, right? But what we're saying, and this is the reason we were not here, we're saying is the way we're looking at this currently, and again, we could reassess this, right? Every half a year, at minimum, dive into the ecosystem and really take a look and see what's going on, more than assessment, right? Break it down and redo all the numbers and make sure we're on track. Now, every half a year, if we see a potential for a problem, we could always come out and say, guys, we're scheduled to have as a reward in the 2-year mark, but we want to implement the preventative measure and avoid a misbalance. We keep it, just I want to make a point here that we don't see it happening. If it does, it's extremely rare. The odds of it are practically non-existent. But just in case, I am a little bit of an overthinker, and I want to be prepared for bad rainy day. So the team here at Steam Exchange, they've kind of grown accustomed to it. It may seem redundant to some of you guys, but they've accepted that this is one of the ways I operate, right? So
what Gary's talking about here is the rewards. So just note there's going to be a starting supply, and then as you mine and as you stake the nodes, the validator nodes are going to get paid out some coin, and the stakers are going to get paid out some coin, and the miners are going to get paid out some coin. And he's saying that by having both, he has two different levers that he can kind of like pull on or tug on in order to make sure the price is regulated. And what he was saying, what he's mentioning is that he's going to try to do that. And if there's ever a problem, and give the community at least 6 months notice. So if they're like, okay, I've been staking nodes, I've been staking on this node, and I know there's going to be a change to staking rewards, then I can, with 6 months should be ample time for me to decide to stop staking if I want to. Same token, if I've been mining and I know, okay, 6 months ahead of time that the mining rewards are going to go down, then I might choose to stop mining if they change the rewards in response to a unbalance, like he said. However, one thing to note is you're probably going to want to continue to mine, because the way they're setting it up is not only are they going to have burns, they're also going to have halvings, just like Bitcoin, just like Helium. So that is something that's really something we want to look out for. But he's saying here, look, just for safety reasons, we do have these two things that we can pull upon as far as rewards go and get things back in balance.
We've all agreed on that we would rather have a preventative measure available as a tool rather than waiting for something to happen and then seeing how we can fix it after, right? So that's why it says term and not year one. And again, we would be looking at things. If we need to change them, we would give you guys sufficient time. Most recently, if you look at a different network that we won't be mentioning, there was a lot of people that got really upset because they feel that they were blindsided by the change, which was rather implemented very quickly, I should say. And the problem with that is investors, when they want to invest in something, especially when they're staking something, right? Which is again not the case here, but this is how it is commonly done. They do a plan for a few years, 2, 3, 4, 5 years, long term, medium term, or short term. But when they do invest, they invest based on the data at hand. Now, if the company goes all of a sudden and flips that data basically upside down on you, you have every right to be upset. And it would seem to me, the way I perceive it, is they knew, and they didn't tell, but they knew. And what that caused is essentially everybody pulled in and joined in because, hey, it's a great system, we like how it works. And then they flipped it on its head, if you will, and now everyone's in there is kind of stuck because it doesn't make sense to move it somewhere else and just kind of leave your funds there, and that is what it is, right? But had you been given a choice prior, you may or may not have done a different decision, but the point is choice.
I think I know which system he's talking about. I don't know exactly what happened. I believe he's talking about Ethereum, and what it sounds like he's saying is that people, because he can't really say names, but I can. I think he's talking about Ethereum, and I think they must have offered a really good staking fee, and quote unquote what he's implying, or what could be implied, is that they're like, okay, let's give people these really good staking fee up front, and then let's just change it on them, Half of them are just not gonna get out because they know they're already in. So we're just gonna give them this really big incentive, and we're gonna change it in the middle, and some people are gonna be pissed, but more than half of them are gonna stay in. So one can think that they did that on purpose. That was almost a plan to do that because once you're staked, you have a lockup period most of the time, um, in which in order to get your coins out, you gotta wait X amount of days anyway. So most people probably wouldn't do that if they're already kind of committed to the stake, is what he's saying. But he's saying at least, we're not going to be a company that does that. We're going to be transparent. We're going to at least give you guys a choice. And how we plan to do that is by giving the changes at least 6 months ahead of time.
Would have been yours. We're all about the choice, right? So if you remember, guys, from the V1 situation, we've always given everyone the choice all the way. So everything we did, we've always given people the choice. And this is important to us. This is why we're saying, okay, if there is a need for something to be implemented and changed, at the very least, the community would have half a year heads up, which is substantial, right? Now, I'm going to leave this for later because I can keep talking on and on and on about this for 1,000 hours straight. I'm just going to get going back with this slide, right? So we strongly tested this formula, and we all agree that the starting supply does.
And this also let you guys know, and this is on his it's on the company website. Gary Bard was a victim of the Quadriga X scam in Canada. If you haven't heard about that, there's a very, very good Netflix documentary on it. One of the guys from Crypto Blood, he does a really cool channel. I think it's called CBTV. He does some stuff on Gentlemen of Crypto Network sometimes as well. So that's why I mentioned him. He's actually in the documentary for a hot second. But the documentary goes over how people got victimized, and Gary was one of these guys that got victimized by this whole Quadriga X scam. I'm not gonna go Quadriga CX. I'm not gonna go into the whole thing about Quadriga, but just know they were a Canadian exchange almost as big as almost like Coinbase, you could think, and they ended up being like scammy. Ran off with a lot of people's money. So honestly, that's kind of why there's no really big exchange in Canada at the moment. But that also leaves a really good moat and a really good area for Steam Exchange to kind of come in and lay their roots down, do it the right way, and actually have a really good competitive advantage if they hit the ground running with this blockchain, and they hit the ground running, vetting people, doing all the things that they've said that they're going to do. Sounds amazing to me. Let's keep going.
Unsatisfied existing investors, and we touched base on that a little bit more, and I'm sure there's going to be a lot of more questions, and we'll take them, and then for the other ones that we won't be able to, we'll take them in and we'll answer them on the chat, no problem. And again, these numbers will be recalculated as we move along, right? Now, also, the amount that's generated is appealing to new investors. It's appealing to people who want to mine, and it's appealing to people who want to just run a node, because not everybody wants to have the equipment at home. It's loud, it gets hot. It also is quite expensive at times, depending on how bad you get into it, right? Why we're saying this? Now, I think it's fair to note something here. I think, yeah, you know what, guys, I'm going to jump right into this. I'm gonna just explain this a little bit. I know this might seem confusing, so I want you guys to listen very carefully, because this is very, very important, and I know it might sound boring, but hear me out on this one, please, guys. Listen carefully. Even though it says there that we're generating 100% in the first year, okay, it does not affect the price of the coin. So
now, one of the things he's about to go into right now is the difference between like coin listed on an automatic market maker like PancakeSwap, which is kind of where they are right now on Binance. They're listed on Binance with via like automatic market maker like PancakeSwap, and that means that they're a token. But once they move on to their own exchange, they're going to become a coin, and then just like any other kind of like exchange, you're going to need to use Steam Coin in order to do transactions. So they already kind of have a built-in burn mechanism, really, because in order to do transactions, you're going to have to use Steam Exchange coin. So keep that in mind as he explains this.
So once again, I'm going to go over this one more time very carefully. Even though we're generating 100% of the coin in the first term, it does not impact the price of the coin. Now, some of you might be confused by this and asking, how is this possible? Without going into a rabbit hole in a sense of a discussion on this, which I would gladly go down that path with you guys, but it's well beyond the scope of how much time we have here. I'm just going to give a simple explanation. The current token that everybody has now on the BSC scan, on the Binance Smart Chain, uses an AMM, an automated market maker, known as PancakeSwap. Okay, with PancakeSwap, it's very black and white. It's very clear. More coins equals less price. Less coins equals higher price. Right now, when you have a coin.
So he's saying with the AMA, with the I'm sorry, not with the AMA, with the automatic market maker, with the AMM, more coins equals less price. Okay.
And not a token. You put it on a centralized exchange. Okay, can you trade it with another AMM as a pair? Absolutely, that's the whole idea there with the blockchain, right? But price of the coin, notice I'm not saying token, I'm saying coin. That's post-migration. The price of the coin is then set by what the community and the users on the centralized exchange are willing to pay for it. There is.
So he's saying like when they migrate it over to Steam Exchange, Rails network, it now becomes from a token to a coin. And that coin can go on other centralized exchanges, a la Coinbase, a la LCX, a la KuCoin, what have you, right? And then it's all about supply and demand, right? So now somebody puts out an order. It's about what somebody's willing to take on a bid and sell of that order, right? So now it's all about supply and demand. So once the coin is listed on the exchange, the supply and demand can drive it up now, okay? As opposed to staying where it's at, it's the automatic market maker, and they kind of determine the price based off of how many coins you have. So in a sense, we can always see kind of how supply and demand is better, because with the more coins you have, and with the more coins you have with the automatic market maker, the more coins, the less price. And there's pretty much no way really around that. But having your own coin, and being able to put it on centralized exchanges, then you can get around that type of problem. And Gary seems to be way more knowledgeable than I am on this. I'm kind of giving you the Cliff Notes version, but the Cliff Notes version is basically supply and demand. Okay, the supply and demand is greater when you're using the coin. You can put it on other centralized exchanges like Coinbase and whatnot. Plus, also that coin is also, like I said before, going to be used on their own blockchain for transactions. So that's you got auto buys already because it has to be used for transactions.
Is no more AMM. So I'm willing to go and elaborate more on this in a question period, guys. But the 1,000-foot high level ceiling on this is AMMs. They decide the price for you. Centralized exchange. It gives you guys the power to decide what you are willing to pay for that coin as a buyer and what the seller is willing to sell it at as a seller. Now, I think I do want to go over how we got to those numbers, but I think we'll go at it as it comes along. I don't want to take up too much time here. Yeah, let's circle back to this in the question period. I think let's go back to the question period. I think that would be best, and we could also explain the time it takes. We touched base on it on our last AMA, just ever so slightly, but how it works with the time-wise, right? Because the starting supply, it essentially uses a few values that everybody can take and kind of calculate it for themselves. Today's coin price, right? And obviously that changes today's supply. And, we had to calculate at which point it becomes not worth it for somebody to participate in the ecosystem, right? And then we had to calculate what's the point where, we say this is too much reward. And then we had to take into account the next 8 to 10 years of halvening, fifthening, or what have you, right? But we also didn't want to set in stone that saying, every 2 years it will have, right? Because it leaves a lot of room for error. Normally, how it's commonly done is people start straight from a coin, and they don't migrate from a token. We are in a very unique position that's different to anything out there in existence, which also benefits our community quite a bit, right? So it's fair to note that we've put countless hours into this, and this is where we landed on a number where we can say this is very much so still preliminary, but this satisfies the equation, because it's not something that, hey, we like these numbers and this makes, this looks good. No, it's a mathematical problem that has a mathematical solution. This isn't something that somebody just liked and the numbers look cool. It's all mathematical. It either.
So basically, he's really telling you we put a lot of time and effort into this. And Gary's background, he says on the website that he's like, he used to mine, I think it was like A icon or something like that coin, but he was like one of the biggest miners of that coin. So he really understands mining, and in the mining, the underlying thing there is like the total supply, the trading price, and the inflation. So a lot of that goes into the mining as well. So he was really understanding of like what tokenomics they need to have, and he's saying, we really put this into a math equation. We put tons of time in, and that's how you kind of got this like almost odd number. It's not like a whole number where it's like, oh, it's 200 million or something like that. It's in a very exact calculated number. So
Works or it doesn't. So we'll touch base on that later. I can imagine there's a lot of questions there. But in the meantime, let's pass over to our head of PR, Enki.
Thanks, Gary. Much appreciated. And just a quick call out here as well, guys. The 100% that you see, that is the cap, right? That is the highest it can be in turn one. As a fact, it can be lower than that as well. But just moving quickly, let's dive into some marketing updates, and then we can.
Here's Enki. Spoke to him, and he's going to give your boy a shout out here. So I'm going to play that part just to poke my chest out just a little bit.
Go back towards our question and answer session as well. So starting from the top, guys, if you have been following our previous AMAs, again, we've shared a ton of content out there, right? So track back to our NFT gateway, the launchpad demo, the mining pool demo, our blockchain documentation, then subsequently this AMA that focuses on the initial supply, right? So there's so much content out there. Now it's essentially our job to translate that or to showcase that in an easily digestible manner, right? So that's what we're working on. We're working on creating maybe infographics, slide tiles for our socials, stuff like that will help disseminate this info in an easy manner, and also help with the P2P, like you can share it with your friend. It helps on socials as well as shilling also. So we're essentially working on building out an additional media base there. So definitely work going in there. We have identified socials, our social platforms as being an area of opportunity, and we'll be focusing our attention here as well. So keep your eyes peeled. We're hopeful that when there are community action / involvement required, that you guys will help. And just a quick little shout out to our Shill Army. We have been slowly picking up momentum in this group, so definitely a shout out there. For those of you that would like to join our group and take part in that sort of shilling or that organic sharing of the project, please DM an admin, and we'd be happy to let you in. An exciting update here, guys. Please listen in. On May 2nd, which is a Monday, our team will be having an AMA. It will be a live AMA with Ruell, and this will be hosted on Benzinga. I'm sure that is a familiar name to all of you guys, but we will have a dedicated Steam Exchange AMA on Benzinga on their YouTube channel, and that will be on May 2nd. This is an incredibly credible sort of platform to help get our messaging and our brand out there. So special thanks to Ruell as well for setting that up. We do look forward to your engagement there, and also to seeing Ruell be a part of this community and engaging with us as well. So just a fourth point I'd like to touch upon, again, speaking to AMAs and YouTube and other influencers. I'm sure you guys are familiar. We did a huge push a few months ago, and we've taken all that data. We've identified a few credible influencers that work well.
So very nice of Inky to give me a shout out. Said my name just a little bit wrong, Ruell. Sort of like Ruell. But that's cool, man. Like, I spoke to Inky, and we kind of got this whole like partnership going. He's nothing less than a gentleman. And I'm very excited to be partnering with these guys. As you can see, like, Gary like really put a lot into that mining, and like you see stuff like this from them all the time. Just like right now, they're about to open up for live questioning. Like not okay, give me the questions that I want from the AMA. Like, not saying that some people do it like that, but I'm sure some people actually do it like that. They probably actually screen questions and only take the questions that they want to answer or stuff like that. These guys are taking live questions, like straight up live questions. How transparent is that? You know what I mean?
For us. The community they well received our messaging, and we will be revisiting those individuals again in an AMA format because that's what we feel like would be best to showcase the the plethora of information that we've shared in the last.
So I think we can skip on to right here. I think this is when they take the live questions.
We should do a proof of concept. We should diet first.
Here it comes.
Let's go over to question period. Can we change the slide there? Oh, never mind. It's changed. Sorry, my bad there. Okay, so hands up, everyone, please, who would like to ask us anything about today's AMA. And if we run out of those people, then we'll circle back to anything else, guys. But if you don't mind.
Okay, so there's only one thing I want to pull out from the AMA here, or from the questions of the AMA, I should say. Someone asks about the GameFi, and I want to see if I can find that.
Please, today's AMA. Would like to go.
And it did. I mean, I was there at launch, so
Supply, which means block reward, right? So 50-50 coincidentally is the number that would be a noticeable on a diagram, right? So you guys can see the difference. I will speak to it quickly once again, unless somebody wants to take a deep dive into it and ask for something particular.
Other mechanisms that we haven't revealed yet because they're not ready to reveal, but when they are, right, it's going to all balance out to what we talked about being a 1 to 3% healthy inflation rate over time. We just have to get there. So we're launching
the Bitcoin, right? It's got happening, right? So all of a sudden, when you hit a block, we can certainly say we've done our due diligence with this.
Okay, so I don't know where that GameFi portion is at right here, but you know what? Let's see here. So the GameFi is just very, 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 very important point. Like I said, for education, it's really cool that they can have like different. Okay, let me see. I'm gonna just really see if I can find
the
it.
original people that were there supporting us from the beginning, right? Guys, Neville, can you take over? I apologize.
Sure. I think a lot of the concern from the community, that at least based on what I'm reading, is that you never mined, you have no intention of mining because maybe it's you
Okay, they go really deep on the mining
process, and you add because whatever number you put now, your end goal in 10 years has to be that break-even point.
Okay, I can't find a part about GameFi, but they're gonna be teamed with. Let me just go over here and go to these universities that they're gonna be teamed with. So first of all, they're gonna be teamed with the University of Waterloo. Not sure if you guys are familiar with them, but I believe this is where Buterin, Vitalia Buterin, graduated from. University of Waterloo. So very prestigious university in Canada. It's going to be amazing that they are working with these guys. The next one was the University of Sheridan. I'm going to see if I can find them. Hopefully I can spell it right. University of Sheridan. Okay, Sheridan College, Chauffeur Road College, okay. Public Polytechnic Institute in Greater Toronto area in Canada. Okay, so Sheridan, and they're working with Waterloo. Huge there that they can get this whole GameFi in. And they actually show a piece of the GameFi. I believe it's this one, which it looks pretty cool. Looks like it's done in, I think they said it was done in Unity and Unreal 4. So that's super amazing. They're going to get like the GameFi piece going where they can actually offer education. And who knows how many educational things they're going to be able to offer. I really think in the end, education is going to be like moving more towards this type of deal where it's like you're almost getting like a certification and you're doing like actual real like kind of online trainings instead of like going into these universities. I really do think it's moving towards that, but it's honestly nice they're starting this with the university, so it's almost like the university can kind of almost move itself into almost like a virtual type of deal. I don't know that that's happening. This is not, this is just my opinion. So yeah, so that's the whole thing in a nutshell. Definitely, guys, thank you guys so much for listening, and definitely come over. The AMA, the live AMA is going to be on Benzinga Monday at May 2nd at 7 p.m. Eastern Standard Time. Definitely come over there and check it out. Take a look at some of my oh my gosh, you guys didn't get to see that picture. Let me just show it to you one more time. I didn't realize it was on this one where you couldn't see it. So here it is right here. Sorry about that, guys. Here it is right here. All right. But yeah, come on over, guys, and check out some of my previous videos here. Thanks so much for watching, guys. I know this was a long one. Thank you so much for listening. Have a good one. Peace.